Okay, so today I'm going to break down the highest probability 930 New York trade, which is this 950 macro. But to give a summary on what was happening, I'm bearish for the day, but we had a really good long setup. I finished trading for the day by taking a long right here. This was the long that I took. It was on the stream, but I took longs here mainly because of a level down here, accumulation, manipulation, and now we're having distribution higher. So with that in mind, the 950 macro was trading off of a continuation of this power of 3. Now, I trade macros mainly, but this is, what is it called? This is a continuation trade. So, right. Now, I trade macros mainly, so this is the model I would be applying day in, day out if I had to start over again. So, macro, I prefer to mark out the macro opening price. So, macros open, and these two highs is engineered sell side or engineered buy side liquidity. Now we have manipulation lower, which we can define the manipulation by watching what we manipulate into. We run lower and run into zero point 0.5 of the range, which is also discount. We run into discount, which that is manipulation. What else do we run into? We also run into the 930 first presented gap, which this shows us that we are bullish because we come into it, we manipulate into it, which is a key level that we look for a reaction off of. And it also shows us that we are bullish by reacting off of it. Now, with that in mind, what else are we doing? Well, our draw on liquidity is also this. This here I'm considering to be a market maker buy model, and this is the original accumulation. So I'm expecting price to run up and reprice above the original accumulation. So our narrative and bias is kind of set. So we know what we're looking for, and we're looking for an entry. So macro, oh shoot, macro, we form a SIBI, we inverse that SIBI after manipulating. If you look on the 30-second, this is actually really internal AMD, which I really like to see that. So, oh, it's 30 minutes. Okay, here we go. Accumulation, manipulation, then distribution, higher. So we're going based off of that trading continuation. Macro inversion, closure above, boom, you set your long limit and tap into it and higher. Now, we some people might have gotten broken even on this after we ran out the high, but something that you could have done to determine if we would have been like reversing or if we're just retracing is looking at this range. This range is unbalanced. Price is more than likely going to retrace and rebalance this range to get up higher. So look, we have this macro BPR, which is the highest probability PD array to form inside of the macro, and it's inside of discount of the range. So you could have easily put your stop below the BPR or just held your stop loss anticipating the macro to get held. Or if you missed the initial entry, you could have taken longs off the macro BPR. Same logic, stop loss below this candle body's low. And target low hanging fruit, which is just this midnight open, the safest draw on liquidity, or we could be targeting what we know price is going to do, repricing above original accumulation into new week opening gap. And this new week opening gap was actually closer to a top tick level for high of day, which I'm surprised about. I'm going to go over that in the vlog for the people that watch my vlogs. I'll probably break down a lot of stuff, but I have to get onto it and kind of break down this level, break down the short, and everything here. But you guys take it easy. Thank you for watching. A little 3-minute recap.